Welcome to Dig Deep, the mining podcast. In this podcast, we go deep into mining news, hot topics, and live interviews with mining professionals and leading figures in the mining industry. Introducing your host, Rob Tyson, founder and director of Mining International and Mining International Executive, a leading global mining recruitment and headhunting agency.
Hi, mining community. Welcome back to another episode of the Dig Deep, the mining podcast. And today's guest is Scott Williamson, who's the managing director of Blackstone Minerals, who are an Australian-based minerals exploration company, moving ahead with their flagship Ta Khoa nickel, copper, platinum group element project in Vietnam. Scott is a mine engineer by background, working in both operations and corporate roles during his career, and took up the managing director's role 6 years ago. He's going to take us through his journey and what Blackstone Minerals wants to achieve. So that's welcome, Scott to the podcast. How you doing, Scott?
Yeah, good. Thanks, Rob. Thanks for having me.
No, I appreciate your time as well. So, as we always start these podcasts off, I just wondered if you can give us a background about yourself. Tell the audience a little bit about your career, what you've done in your career up until sort of present day.
Yeah, no worries. Thanks, Rob. Yeah. I actually grew up in Geraldton, which is 4 hours north of Perth in Western Australia, and my background or my sort of family history is actually more in agriculture. But there was 2 generations ago, my great-grandfather was actually a mining engineer, and I only found this out probably halfway through my degree. So it's so we've got a bit of a family history in agriculture, but also in mining. And so I ended up at the West Australian School of Mines in Kalgoorlie. It took me a little while to get there. So you can actually start your degree in Perth, and so I started in Perth, and it took me a while to move out to Kalgoorlie, but once I got there, it was probably some of the best times I've had out there in Kalgoorlie, and so studied mining engineering, but also I did a double degree with commerce, so majoring in management as well. So I've got the double degree with commerce, which has come in handy in my current role. So I started mining engineering with Rio Tinto as a graduate mining engineer at the Argyle Diamond Mine, which was a great platform to learn the engineering field. And I learned a lot about underground mining, but also large-scale underground mining. So Argyle Diamond's actually a block cave. So I was up there setting up the block cave. So that was a really great experience. And then I decided to move over to the east coast of Australia using my degree as a sort of a platform to sort of explore the east coast, and landed in Ballarat and worked at the Ballarat gold mine, and then went back to Rio Tinto and worked for the North Parkes copper mine, which is another large scale block cave. So I did a second stint in block cave mining. Then I went up to Krakow, which is a little gold mine up in Queensland, and then eventually ended up back in Western Australia, working for Perseus in West Africa, in Ghana, and that was a great experience as well. So I got exposure to international mining and mining in emerging markets with Perseus. And then I made the jump into the corporate world with a company called Hartley's, which is a small stockbroking firm in Western Australia, in Perth, and that gave me exposure to the financial side of mining as a mining analyst. So I learned how to sell mining stocks and understand and analyze mining companies and mining projects. So that gave me a great understanding of the financial side of mining. And that was, and then my final role before this role was investor relations with Resolute. So back in West African gold with Resolute as the investor relations manager, which was also another good sort of stepping stone into this role, which is really, it's all about investor relations. My role is 80-90% of my role is looking after my shareholders, and that's, having that technical background helps, but really it's a corporate role that is all about creating shareholder wealth.
Yeah. Obviously, you're the managing director, and as I mentioned in the introduction, you've been there 6 years. So I just wonder if you can tell us a little bit about the company and also your journey during those 6 years as the managing director.
Yeah, it's amazing that it's been that long. It's been a real roller coaster ride. So when I first started, we just acquired an exploration asset in British Columbia, Canada, and it was a focus on cobalt. And so the idea was, in the early days, that cobalt was the critical metal for the lithium-ion battery, and so we started exploring for cobalt, and we were limited. We had limited success, unfortunately, with the scale of the opportunity that we found, and but at the same time, we started going into South Korea and talking to the battery manufacturers about the chemistry mix in the battery. And so a lot of people don't realize that the lithium-ion battery is actually full of nickel, cobalt, and manganese. And we thought cobalt was the metal of most focus, but what we realized very quickly is that they were starting to remove the cobalt from the chemistry mix, and they were increasing the nickel content. And so with these relationships we'd built in South Korea, we started to understand that, okay, we need to start looking for nickel. So they effectively said to us, go and find nickel. Particularly, we want nickel sulfide, and we want large scale nickel sulfide. And it was actually the Koreans that said to us, yeah, go and find some nickel. And so we landed in Vietnam, and we looked all around the world for nickel opportunities, and particularly nickel sulfide. And unfortunately, there's not many nickel sulfide opportunities in the world. So you've got Australia, Canada, China, Russia, and there's a few scattered around Africa and South America. But what we saw is that the Australian assets that were available were too small. They didn't have the scale that we're after. The Canadian assets had scale, but they didn't have the grade. And so we landed in Vietnam because we had scale, and we also had some good grade as well. So we've got a combination of some large scale open opportunities, particularly in open pit mining, and reasonable grade as well. So compared to some of the Canadian nickel sulfides. So yeah, it was really a strategy that was built on a customer-led focus, really. So we went to the customer. The customer said, no longer requiring cobalt, can you go and look for nickel? And then we landed in Vietnam 4 years ago, and we haven't looked back. So at the stage that we acquired the nickel mine in Vietnam, the company was basically at shell value, I think around $5 million. So it was a bit of a pivot, but it was driven by this strategy from our customers, and that's really sort of allowed the company to grow in a different direction, and has really put us on a really strong trajectory. And it's been a wild ride, and we're very lucky to have some very supportive shareholders now, and we're at the final stages of the study work to build a mine and a refinery in Vietnam. So it's been a big 4 years since we acquired the mine in Vietnam.
Yeah, I mean, it's interesting that you said that it's customer led, because obviously in business, you start a business because your customers want something, and you're able to produce, whether it's a product or service for your customers. But I guess a lot of mining companies don't take that approach. They go out and find a commodity or mineral and think they can just mine it, and then go and find the customer. But you done it the reverse. Is that tends to what happens?
Yeah, you're right, and particularly exploration companies, they'll just explore for metal or of any different commodity, whatever's hot at the time. And I think it's probably from my commercial background in mining analysis, and my understanding of the economics, and the fact that I'm a mining engineer is probably driving that sort of focus on, okay, well, let's not just go and explore for something that nobody wants. Let's really go and explore for something that we know is going to be in demand, not today, but maybe in 3 to 5 years' time. You've got to be ahead of the cycle. So it's no good going to try and look for lithium right now, because everyone wants lithium. So you want to be looking for nickel 4 or 5 years ago when we were, and at the same time that people that were starting to get into lithium as well 4 or 5 years ago. So you really want to be counter-cyclical. You want to be ahead of the cycle, but you want to be talking to the customers, because they gave us that guidance well before any investor was aware. So we were lucky that those customers were talking to us, and if it wasn't for that sort of communication that we had with the customers, then we probably would have gone chasing something else. And so yeah, it's important, and I think it is something that is forgotten a little bit in the exploration space. It's more about, unfortunately, it's about where do you find your next capital raising, and unfortunately that generally is going to go, you're starting to look for whatever's hot at the time, but really it is very inefficient, because you have to be counter-cyclical to be able to pick up assets cheaply and then add value, and then sort of ride the change in the cycle.
Yeah. How many people actually think like what you've just explained?
I think the biggest problem is that the market is so small for the amount of money that's available for exploration. So you do have to just sort of move to where the money's flowing, and a lot of people aren't thinking longer term, because they're just thinking, where's my next capital raising, where's my next lick of cash to keep the thing alive. Whereas because we went to Korea, we got an understanding of the long term, I suppose, cycle of battery metals. We got an understanding that these things will be funded by large South Korean, Japanese, or Chinese, or large corporations will fund these projects. So we had that confidence to think a longer term than a lot of our peers that are just, unfortunately, they have to go to the ASX platform to raise their capital. So we're very lucky that we've got this opportunity to raise capital it's a lot longer term vision, and these guys are looking 10, 20, 30 years out, and they're throwing billions of dollars around. So for example, groups like LG, the major battery manufacturer out of South Korea, they're investing $10 billion into the Indonesian nickel to source and secure their nickel supply. So these are numbers that only the juniors on the ASX can only dream of, but we've got access to them because we've been working down this sort of strategic path for about 4 years now. So yeah, we've gained that confidence by continuously engaging with those customers and understanding where they're heading and understanding exactly what they require. And whereas your average junior is just drilling and hoping they'll hit something, and hopefully it's something that people will be able to raise money for you and that sort of thing. So it is a completely different strategy. And I don't think there's a few of us that are in these critical minerals that are reaching out to strategics, but it is it's probably harder to go down this path because you can spend 3 or 4 years and not see any money, whereas down the conventional path, you just ring up the local stockbroker. All right, let's raise some money. So it is actually a lot easier to go the conventional route.
Yeah. So I just wondering if you can just give us an introduction to your flagship nickel project in Vietnam.
Yeah, so it was a previously operating nickel mine, and you can see behind me that it's a small nickel concentrator that operated between 2013 and 2016, and operated in a difficult nickel price environment. And when the nickel price was about $8,000 per tonne back in 2016, it went into care and maintenance. And the previous owners, they didn't explore the full potential of the district. They depleted the first ore body, and then they left behind 25 targets. So we've systematically tested a lot of those targets, and we've drilled 100,000 meters of diamond drilling, and we've discovered a 10-year mine life. And we'll produce around 18 to 20,000 tonnes per annum of nickel, which is a fairly large scale nickel mine. And so we're in the final stages of the study for the mine, but we're also looking to build a refinery. So we're going to take the nickel concentrate from the mine and convert it into the first stage of the lithium-ion battery, which is a chemical product which has nickel, cobalt, and manganese in the ratio of approximately 8:1:1. And so that's the first part of the cathode. And then to produce cathode, you then combine that with lithium. So you combine your NCM 8:1:1 with lithium, and then you have a cathode, which is the key part of the lithium-ion battery. So we're effectively producing all of the other parts of the cathode except the lithium, and that's the NCM 8:1:1. So that strategy is all built on customer interaction, customer-led communication, and so it was that early move into South Korea that very quickly we realized, okay, the battery industry can't deal with a nickel concentrate. So these guys, the conventional miner will produce nickel concentrate and they'll sell it to a smelter. The battery industry has no way of dealing with nickel concentrate. So very quickly we realized, okay, we need to go downstream. We need to build a refinery that produces chemical products that then can be fed into this lithium-ion supply chain, the lithium-ion battery supply chain. So yeah, it was really that sort of focus on the partners and the customers that really pushed us into the downstream strategy. And we were very early on the downstream strategy. 4 years ago, we talked about downstream nickel, and now it's becoming the normal for the industry. Is everyone wants to push downstream, but back when we started pushing downstream, it was still a fairly new strategy for the mining industry. There was a real lack of willing, very much the flavor of the month, and everyone wants to go downstream. But we've got four years of understanding of the downstream, and through those relationships with South Korea, we're well ahead of a lot of our peers with our understanding of the downstream processing of nickel products. So, and Vietnam's a great location to be doing it. So we've got abundant renewable power, which is driving a green product. So a low CO2 footprint, green nickel chemical product for the lithium-ion battery. It's definitely in high demand, and yeah, we're sitting in a really strong position now at the final stages of our study, where we're looking to lock in our partners to go into the build phase.
You obviously given and we're speaking about obviously the partnerships. You're obviously, as your company's plan is to be sort of net zero, a net zero producer of copper concentrate for EV batteries. Just wondering if you can just tell us a little bit about how you're going to do that.
Yeah, so we're very lucky that the sulfide nickel is the better nickel type. So there's two types: nickel sulfide and nickel laterite. Sulfide nickel is the type that is more easily consumed into the chemicals and has the benefit of, so the sulfur creates its own energy, it creates its own acid, and so you don't need to throw as much energy and acid at the product, and so it gives you that benefit of a low CO2 footprint from day one, but just because we've got sulfide and sulfur in the product. The other thing that we're looking at is because we've got the renewable power, looking at a full electric mining fleet, and we've integrated that into our pre-feasibility study work. So one of the first companies to really do that and integrate that into the study work. So we've got a full electric mining fleet. But also we're looking at a downstream process which goes directly into a hydrometallurgy process. So conventional nickel sulfide goes down a smelting route, which is a pyrometallurgy technology, which has a higher CO2 footprint. We're looking at a hydromet process, which is better suited to the chemical products for the lithium-ion battery. So we're doing it slightly different to your conventional route, which is smelting, which is a process that's been set up for the stainless steel industry. We think the better way to do it is a hydromet, which is much more efficient for a chemical product, but also allows you to drop that CO2 footprint. So yeah, there's a real pathway here to net zero for us, and we think we can potentially do that from day one. and that would be a great outcome for our customers. And what we're seeing is that the customers will probably pay a premium for that ability to be net zero, or at least a green nickel product, compared to a lot of our competitors in, say, Indonesia, where they have a nickel laterite, which we believe just won't be able to get the CO2 as low as we can, and definitely we don't think they'll be able to get anywhere near net zero, and we think we can do that, and that'll be a great result when we achieve it.
Can you explain the company's multi-product strategy, and obviously the premiums, as you just mentioned, that you'd be able to get for the products you produce?
Yeah, so the process to convert nickel concentrate into these downstream products, we go through a few steps, and it's very modular as well. So the first step is to take the concentrate and convert it into what they call a mixed hydroxide precipitate, or an MHP, and that would go through a further leaching process and solvent extraction to produce nickel sulfate and cobalt sulfate. And so those two products, we can convert them into crystal and sell them as products which trade at a premium to the underlying metal prices, or we can keep them in the sulfate in solution and then combine them into the NCM 811. So NCM 811 trades at a premium to the sulfate premium, so it's a premium on a premium. So the NCM 811 can trade as high as 20 to 40% premium, depending on the different supply demand dynamics. The other products that we will produce is copper cathode. So one of the steps is to remove through solvent extraction the copper sulfate, and then use electrowinning to produce copper cathode. So it's a multi-product strategy. Means we can sell nickel sulfate, we can sell cobalt sulfate, or alternatively, we can combine them with some manganese to produce the NCM 811. So, and the reason that's important is because a lot of these battery manufacturers already have existing supply chains, and so that nickel sulfate, cobalt sulfate is still in high demand, and they'd like to be able to plug that into their existing supply chains. But ultimately, we believe the better way to do that is to do it in Vietnam with the abundant renewable power, the very competitive labour costs, and minimise the transportation of the nickel sulfate product, because that by transporting intermediate products like, say, nickel sulfate, which is only 22% nickel, you're adding CO2 every time that product gets on a truck or a ship, and unless they're electrified. So it's really about minimising the transportation of intermediate products, but also this is another customer-led strategy. So we can't just go out there and say, or we only sell NCM 811. We've got to be flexible to what the customer's needs are, and some customers need nickel sulfate, some need NCM 811, some need cobalt sulfate. So it's really another customer-led strategy.
Obviously, given your business model is a partnership-based model, can you update us on the process around finding potential partners?
Yeah, so what we've done, we've focused on South Korea for now 4 or 5 years, and they've taken us through this journey. We've actually engaged one partner that hasn't played out as well as we hoped, so we're now looking for a new partner. So we're focused on South Korea to date, and we're getting very close with those potential partners. But we've also decided, well, why not open up the search radius to include Japan, China, OEMs as well, so car manufacturers as well as battery manufacturers. And so we've got an opportunity now we've built very strong relationships in South Korea, and they've been with us for 4 or 5 years, so they've been along the journey. They are well advanced, but we've decided, okay, well, why not open this up and include other potential partners, and if not, just to put some pressure on the South Koreans as well, because there's nothing better than being in a competitive process, and so we've now created that competitive process, and it's working well. So we've now got many opportunities on the table, many more than we had even three months ago. So yeah, so it's about building that competitive tension, understanding the products that are required and the position that these downstream players are in, and then just then working through that competitive tension and getting the best deal for our shareholders. And unfortunately, that just takes time. So it's taken longer than we thought, and it's taken longer than the shareholders hoped. It's taken longer than we'd ever hoped, but we're getting there as well. And the other thing is that these groups need definitive feasibility studies and final studies to be able to commit significant amount of capital. So we're looking at a circa $1 billion project. So we need to be at that definitive feasibility studies phase, which we're at now, which is only just coming to the end of that study now. So we're now in that position where we can go to the strategics and say, yep, here's the study, let's do a deal. And so we're building that competitive process now. And then once we've completed the study over the next few months, then we can get the bids in.
These partners, obviously, you mentioned like car manufacturers, electronic manufacturers, for instance. Do they actually understand the long lead times to start a mining operation? Obviously, they probably do now speaking to them, but did they initially know how long it takes to obviously start and build a mine?
Yeah, it is a big problem. So the problem, what we found is the further away the customer is to your part of the supply chain, the more difficult it is to deal with them. So the immediate customer, which is say a cathode manufacturer, they on a daily basis they're buying nickel and cobalt and manganese. So they're in the market, so they understand the market. They understand how long it takes to bring a nickel mine on, a cobalt mine, a manganese mine. The further you go down that supply chain, and obviously the car manufacturer is the last line, the less understanding they have of the other parts of the supply chain before them. So they definitely do not understand, and that's why we've preferred to deal with cathode and battery manufacturers, because they are a lot closer to our part of the supply chain, but also their understanding of mining is a lot better. And so, for example, and a lot of these Korean and Japanese and even Chinese groups have been sourcing metals for other parts of their business. So, for example, like groups like POSCO in Korea have been sourcing materials for their steel industry for the last 10, 20 years. So they have an understanding of mining through their other business dealings. And so that's really helped as well. So we definitely prefer groups that understand mining and understand the process and how difficult it is to bring on a mine. And unfortunately, the OEMs are nowhere on that front. And they're starting to really work that out very quickly now. And unfortunately, yeah, it's going to create a real supply crunch, and we're starting to see that in lithium, and we'll see that in nickel going forward.
Yeah, certainly. And obviously talking about partners, is it as simple, or which I doubt it is, but as simple as whoever presents the best deal or the type of product that you potentially would partner with is a key consideration, or is there a lot to it in analysing a partner that you're going to work with?
Yeah, so obviously it's all about the best outcome for the shareholder. So, and that economics plays an important role in that. But we also have to think of particularly things like ESG. So ESG drives everything that we do at Blackstone. So we need to pick partners that are focused on high levels of ESG compliance, similar to we are. So yeah, it will come down to economics, definitely. But we need to choose our partners that are aligned with our strategy on ESG, which is net zero carbon, low carbon nickel, but a real focus on social compliance, like looking after the local people in Vietnam. That is very important to us. And so the partner has to have that same focus on social and corporate governance as well. A lot of people forget that the G in ESG, and that is a very important thing for us, is making sure that the partner is aligned on the corporate governance side. So yeah, I think if they've got the right price and they can tick all the ESG hurdles, then they're pretty much there for us.
Are Blackstone Minerals green credentials especially attractive to the groups you're talking to? And is most of the interest coming out of Asia and Europe, or is there other parts of the world?
Yeah, so it's a really good question. So what we're seeing is, particularly out of Europe, there's a real understanding and focus on ESG and low carbon. So what we're seeing is what we think is happening is that the European car manufacturers are pushing back to the battery manufacturers and saying, your CO2 footprint of your battery needs to be under this level or lower. And so what we're seeing is that now the battery manufacturers are coming to us and saying, oh, well, you've got that low carbon nickel that we need. We can't find much of that. Would you like to sell us some? And we're saying, well, yes, but you might have to pay a premium for that. And so, and they're very open to that, because to attract the premium car manufacturer brands, these brands have been built over decades. They can't tarnish their reputation by taking dirty nickel from Indonesia, for example. So there's a lot of interest, particularly out of what we see coming out of Europe. But it's a Western thing. If you've got a premium car brand, you just can't tarnish that brand by going and taking cheap, dirty nickel from, let's say, Indonesia. So yeah, and what we're seeing is that particularly those Indonesian groups that are operating in Indonesia, they understand this more than anyone, because they're the ones that are being scrutinized. And so the groups that have already gone into Indonesia, they're the ones that have realized, okay, well, they're getting pushback from their downstream customers and saying, no, we can't take that. And so they're the groups that are coming to us and saying, we need all the green nickel that you can deliver us. And so that's putting us in a really strong position. I think because of that European focus on ESG, there's a good chance that our nickel will end up in a European car. But on the same point, we think that the US will also head in this direction. At the moment, the US is focused on the IRA, which is a policy around securing metals from free trade agreement countries with the US. But I think ultimately they will push down this ESG path as well. So yeah, I think our nickel will most definitely end up in Europe, and most likely also in the North America region. And but yeah, we're on the doorstep of a local EV player as well, VinFast. So there's a very, very strong chance that our nickel will end up in an electric vehicle built in Vietnam, which is a great story. So taking nickel all the way from our mine in Vietnam all the way through to a locally made electric vehicle by VinFast is a great story for Vietnam. It's a great story for Blackstone, and it's a great story for VinFast. So that's another likely scenario, is that, yeah, our nickel will end up in an electric vehicle in Vietnam.
And with obviously the products you're producing, how many, I suppose, and looking at scale, how many car manufacturers could you supply your products to? Would it solely be potentially just one company?
Yeah. Unfortunately, the demand is so great that we may supply one or two, maybe three, but we can probably, I think the numbers are something like we might do 1 million cars per annum. So, which is not a large amount on a global scale, and that may allow us to supply one or two, maybe three, but it's not a large number compared to the amount of vehicles that will be sold over the coming years. So yeah, I think there's a scenario where we would have multiple customers, and some may go to Europe and US and locally as well. So yeah, it'll be good to have that diversified sort of customer base. But yeah, there's more than enough demand for one vehicle company to take all of our nickel, and more, and more than we can deliver.
Given obviously the tough markets at the moment, do you think when news comes out around obviously partnerships and funding, the stock could get re-rated?
Yeah, most definitely. So we've got an MPV of maybe $2 or $3 billion, and the reason the market is trading so low is it believes that we'll never be able to build it. And so as soon as it looks like we're going to build it, then it starts to trade more in line with the fair value of the business. And so if we can show that we're going to build it and we're not going to do major dilution to the existing shareholders, so it's always about MPV per share. And so they know that it's 3 billion, but they're worried that we're going to issue so many shares that they'll get diluted. Once the market realizes that there's not going to be major dilution because we're all major shareholders ourselves, and we're going to build this and produce products and cash flow. I think the mine and refinery spits out $500 million per annum or something like that. And so ultimately, it will trade in line with the fair value, which is multiple billions of dollars. So it's as soon as we can show that that will happen, and the partnership is the first stage of that, then it should re-rate significantly.
You're aiming for the middle of the year to release the DFS. Just wondering if you can give us an update on that, and what are the key milestones for to the sort of company story?
Yeah, so that's an important one. We're getting very close to that, and the other thing is we're also looking at the partnership as well. So we don't want to come out with a DFS that's not aligned with the partner. So there's a bit of a juggling act there. So we are getting close on the DFS, but we're also getting close on the partnership. So which one will come first, and maybe they come together. So there's that. And so really it's locking in the partner, completing these studies, and then really moving into the build phase. And the build phase requires a partnership, but also requires debt. The debt will be linked to that partnership. So it'll be government-backed debt associated with the partners. And then we move into the build phase in the new year. So it's so it's that final stage of studies and funding which will unlock the value, and then we move into the build phase.
And concluding, what's the outlook for the sort of next 6 to 12 months? And is there anything else you'd like to add?
Yeah, so it's really the 6 to 12 months. So the next 3 to 6 months, we're running that competitive partner process. We land the partner, we come out and say, this is the partnership structure, whether it's 50-50 or whatever we end up building that partnership around, and how that sort of partnership plays out over the mine and the refinery and the ultimate products as well. So what product will the partnership be producing, all of that. So that in the next 3 to 6 months. And then we go into that build phase. So so it's a big 6 to 12 months where we go from market at the moment saying you're never going to build it to it's going to be built. Now we need to value it appropriately. So then it's sort of well, how much is this company worth? And the numbers are saying 2 to 3 billion. We've just got to show that pathway, and that pathway will come to the market over the next 3 to 6 months.
Scott, really appreciate your time. Thank you for coming on and telling us more about the company, and especially the processes that you're going through, and the partnership story as well, which I think is important. And also customer led, which I think is a bit of education for people that are listening to this episode. So really appreciate your time. If our audience wants to reach out to you, if they've got any questions, if they want to follow your story, how can they go about contacting you, reaching you, and following your story on social media?
Yeah, so we're active. I'm personally active on LinkedIn and Twitter, so we can communicate via those channels, or just through the email. And we're very open to dealing with any queries that come through. So more than happy to get on a call even and talk through questions.
Yes, certainly. And we include those in the show notes, accompany this episode as well for easy access. So Scott, like I said, really appreciate your time. Be good if you come on sometime next year and give us an update, especially around obviously the build and the partnerships that hopefully you would have done deals with. It's good to understand the story in a lot more detail. So really appreciate your time. Thank you, audience, for listening. Certainly a lot to take away from that. So a lot of education as well, especially the customer led. I think that's important. And obviously not many people or companies are doing that out there. So a lot to take away. So appreciate your continued support. Please keep sharing this episode and the podcast to others within the industry, but also people outside of the industry. Obviously, from what Scott said today, batteries are going to become more and more important in everyday, in everyone's or every people's day. So listening to something like this is a bit of education. So please share this episode for people outside of the mining industry also. So until next time, happy mining.
Thank you for listening. Remember to reach out to Rob via the show notes and be sure to subscribe and leave a review. Until next time, happy mining, helping each other to improve the mining industry.